My name is David, and I'm one of the editors here at Finance Magnates. And now we have what I think may be the most interesting talk of the day, which is Rosario, who's going to talk about Prime Brokerage in the cryptocurrency industry. And he's from OTCXN and has come from San Francisco. So I'll leave it to him.
All right, thank you, David. Thanks, everybody, for taking a few minutes to join us. We're excited to tell you about what we're doing as a company and also do a demonstration of one of our trading venues as well. So OTCXN, we're basically a capital markets trading infrastructure and blockchain technology company. What we do is actually a quite broad digital asset play in terms of the infrastructure that we've created. We are getting started, though, with cryptocurrencies and with spot foreign exchange, and we'll talk a little bit more about that in just a moment. It's important to understand that you don't think about us just as an exchange or as a trading venue, but really we have a very, very specific value proposition, which is the elimination of trading counterparty and settlement risk. We basically have four major parts of our technology stack that help us to achieve that objective. There's an asset tokenization part of that. There is a proprietary blockchain layer. There's real-time collateral management, and then there's, of course, trading venues that sit on top of that common backbone. Our system is live and in production. We launched our OTC block trading platform or venue last week, and we've done really what are the first trades ever of tokenized fiat currency that were exchanged with tokenized cryptocurrency, and we'll actually give you a demo of that shortly. The way to think about what we've built in terms of our infrastructure is really a technology equivalent to Prime Brokerage. And again, there's four major components of that. There's an asset tokenization or asset digitization aspect of that. We can do that with any asset today, whether that's fiat currencies, cryptocurrencies, could be fixed income, credit, commodities, you name it. Those assets, that digital representation of those assets, is issued onto a proprietary enterprise blockchain layer that we built from the ground up. So this is not a fork of any other blockchain platform, but this is actually something that we've built from scratch. That's a multi-ledger architecture that's very purpose-built for capital markets trading use case in terms of performance, scale, and many other facets of it. Allows us to support the digitization of any kind of an asset. And again, that tokenization of the assets onto that proprietary blockchain layer is what creates the provability of assets and the ability to maintain cryptographic proof of ownership of those assets as they're traded in the market. The third component of our infrastructure is collateral management. So this is real-time collateral management powered by those provable assets on those custodial blockchain ledgers, together with margining, mark-to-market, and all the continuous net settlement tools that are required to operate this infrastructure. The fourth component of it is the secondary market trading. And again, this is provable assets that are on those custodial ledgers with real-time collateral management driving secondary market trading across an array of different venues. So the first venue that we launched and went live with last week with client-to-client trading is an OTC block trading platform. We'll show you a demo of that. Between now and the end of the year, we'll be rolling out a dark pool venue as well as a lit central limit order book exchange venue. We also have liquidity aggregation and smart order routing that helps us with some of that internalization. It's fixed APIs and UI available across the board for accessing all of those different types of liquidity. And again, this infrastructure gives us that ability to eliminate the trading counterparty and settlement risk without the use of our own balance sheet or credit. So this is a slide that talks a little bit about two main actors in our network. There's really two main actors, custodians and trading entities. The Custodian Application is a solution that we provide to custodians that requires no technology integration, that gives them the ability to basically create blockchain ledgers with a few mouse clicks, and the ability to see incoming requests from clients to take assets that are held by that custodian and digitally represent them on those custodial blockchain ledgers so that they are then available for transacting within the network. The trade desk application is the solution that we give to trading entities that gives them the ability to manage their collateral, gives them the ability to access various types of trading. And with that, what I'm going to do is cut over now to a demonstration. And what we want to show here is how the two applications interact, how the custodial application allows for the tokenization or the digitization of those assets onto a custodial blockchain ledger, where it then shows up on the trading application side of things. So I'm going to switch over to one of my colleagues who's joining here in the audience, and he'll take you through that. So I cannot get rid of that pesky thing there, but let's, if we go down to the upper right, we'll just show briefly the available ledgers that this custodian has created, and we'll show how to add a ledger. And we've made this very simple for the custodians. They don't have to think about running a node or private keys or anything like that. Everything is completely managed for them and very straightforward. But this gives them the ability to set up custom fields around all of the information that they want to see in an incoming request to issue collateral or an incoming request to redeem that collateral off network. And they can set up anything that they require of the client there. And so this makes it a few mouse clicks, create a new asset ledger. And now we'll go back to the main part of the custodian desk. And what we have on the top side is a bunch of tabs related to issuance of assets onto those ledgers. The middle section is covering all of the redemption, and down below we have things like Blockchain Explorer, block explorers, audit blotters, balances across all your assets, or across all your clients and all their assets, and then also a reconciliation snapshot report, which gives them the ability to see their net settlement amounts due between accounts at the custodian. So now if we jump over to the trade desk, we'll show the issuance or the request for the issuance of assets onto the network, and we'll show how that shows up over at the custodian desk. So you can see down in the bottom left-hand corner, there's a balances tab that's open. We can see that there's 1 Bitcoin on deposit from custodian 1. There's $10 million at custodian 2. And so what we'll do now is add a bunch of additional Bitcoin. We'll switch over to the collateral management side of the trade desk application. And again, like the custodian desk, the top part is related to requesting issuance of assets onto the network, and the bottom half is related to the redemption of collateral off network. So we're going to go ahead and fill out the form. This is a simplified version of the form that the custodian would provide for the information that they want to see from you for that request. We'll go ahead and add an additional 1,000 Bitcoin to the network and hit submit. Confirm our details. And now we can see that we have a pending request for 1,000 Bitcoin to be added from our cold wallet at the custodian to be digitally represented now on network. And we'll switch back over to the custodian desk and see how that comes in. So now we have that request there from that first trader requesting that 1,000 Bitcoin. The custodian can drop that list down, see all the information that was in that form that was submitted, which would normally have things like special pins and so forth in terms of how they validate those requests. They would then at this point look at that trading entity's cold storage wallet and see if, first of all, if they have that 1,000 Bitcoin available to move onto network. So let's assume that the client had 2,000 Bitcoin in cold storage. They would put an administrative lock on that 1,000 that's being requested. And then after putting that administrative lock, and they do this in various ways, most of them will move it to a secondary cold wallet to make sure that it can't be double spent, that they're effectively attesting to the fact that those assets are reserved for use on the network. And now we'll go ahead and accept that, and we'll go back to the trading desk and show how those assets have now showed up. If we go back to the main dashboard, well, first we see the request was complete, and now we see we have 1,001 Bitcoin that are available on network. And at this point, these assets are available to be freely traded with anybody else that's on network without any trading counterparty or settlement risk, because these assets are held at the custodian and reserved for this purpose. I'm going to jump over now to another slide and talk about the OTC block trading venue. So that part of the application that we were looking at there was the front end that we were looking at was related to the OTC block trading. In the current world today, you call up somebody to do a block trade. Settlement can take at best from hours to potentially days if you're moving money across borders. The idea here is that we move people off of trading on Skype and group chats to a professional platform where that transaction happens in 250 milliseconds and is against provable assets that are at the custodian on those custodial ledgers with instant clearing and settlement that happens atomically where there's no trading counterparty or settlement risk. So you have no initiator risk in terms of initiating one of those block trades. Today, if you call one of the big OTC desks, you will basically have to send them coin or send them dollars and wait for them to send you the other side of that trade. And then those assets that you transact here, even the crypto assets, are immediately retradable on this network, and we'll talk a little bit more about how that works. Very importantly, all the crypto assets are always in cold storage. So we have removed all of those public ledger transactions from that real-time trading critical path, and we'll talk briefly about that in a moment. At this point, I think what we'll do is we'll go back to the trade desk, and we'll actually just show a trade. So there's, let me go back over there. And so we'll go back to the dashboard view. And here on the top, we see outbound tickets. So the types of orders that we support, if you look in the order ticket under order type, are RFQs, unsolicited orders, and manual orders. So if you do trade off platform, you can book the trade here. It actually does the trade, clears and settles it against provable assets. Request for quote, standard institutional workflow. We'll go ahead and choose that. We'll just quickly fill out this order ticket. Time and force, we'll just do GTC. Quote type, we'll do negotiable. And what we'll do is sell 100 Bitcoin. And you get to choose which custodian those assets are coming from. This is a multi-custodial solution, so you can have assets across a range of different custodians. And we want dollars for the Bitcoin. This platform, you can trade crypto to crypto, fiat to crypto, and fiat to fiat. And in the counterparty list, this is where you can direct that order or that request for quote out to any number of counterparties. You can create groups here, or you can select them individually. You can also trade anonymously by clicking on anonymous. We're logged in as a second user, so we'll go ahead and just pick that one counterparty, and we'll show the back and forth as we submit that request for quote out. And now we'll jump over to Trader 2. Bit of an awkward demo because you have to log in as 3 different parties. It's the law of demos here. So I guess, again, let me switch back to the presentation for the moment. Let's talk a little bit about what happens after the trade, and then Lee, signal me when you've got that back up. So again, this is just a diagram that sort of explains a little bit about what's happening on the backside. So we have Custodian A on the left, where Trader 1 starts out with, in this example, $10,000. Custodian B on the right, where that trader starts out, in that case, with 5 Bitcoin. And what we do is those provable assets that are on those custodial ledgers are actually incorporated directly into our real-time pre-trade risk and go through that entire matching engine pipeline. So at the time of a trade match, so you not only have the real-time pre-trade risk, but then at the time of a trade match, you have, again, a check that those assets are provably there on those ledgers, and then an atomic exchange transaction that changes the ownership cryptographically on those blockchain ledgers at the two custodians, where it's done with a single concurrent write. So that's why the term atomic means concurrently. That's a single transaction that happens across those two blockchain ledgers. And that's what allows us to basically do the instant clearing and settlement of that trade without any trading counterparty or settlement risk. And we're adding support for additional periodic settlements. There are certain types of market participants that don't want to actually deliver coin and be fully funded with coin and deliver it instantly, but they want to settle end of day, so that we can use collateral that they have to back their financial obligations to the trading counterparties on the other side, where those assets could be dollars or could be treasuries or whatever else the parties agree to accept. And I'm going to switch back to the trade desk here. All right, so we'll send that ticket through again. Again, this is Trader 1 sending a request for quote to Trader 2. Trader 2 sees that come in. From their point of view, it's somebody asking them to buy 100 Bitcoin, and they're being asked to provide a rate. So you can go ahead and add a rate. And we do support two-way pricing, so people can come in and say, give me a price to buy or sell or bid an offer. We'll go ahead and hit accept at 62.80, and we're referencing the index price up above. So here we see back on Trader 1, we've got that quote back in at 62.80. We can accept that quote. If we had sent this out to multiple counterparties, it would build a book for us there based on best price and size. And we can negotiate that. So we see we've negotiated it to 6,300. We'll bounce that back now to Trader 2, and we'll show that on the Trader 2 side. So here we can see that they see 6,300. If they wanted to, they could look at the prior rate that they quoted by mousing over just to keep track, because you can imagine you have multiple conversations going, trading with different counterparties. And we'll go ahead and accept that just for the sake of time and show that trade cleared. And again, that was Trader 1 selling 100 Bitcoin. So now if we go back to Trader 1, we'll see that down in the balances, let's see, get a refresh there. Is your Wi-Fi crap out on you? Well, and the idea there is that that would be debited against the balance. Unfortunately, it's not. We're not getting a refresh here. And if you go back to Trader 2 real briefly, let's look at, we can just see that there's an audit trail that's available within the ticket. And there's also one down in the trade blotter. You can drop those down and see the entire audit trail as you negotiated that transaction through. So I'm going to switch back at this point to the presentation. And let's see, we'll advance through a couple slides here. So the other thing that this lets us do, so we just looked at block trading basically with instant clearing and settlement between two counterparties with assets that are provable at two different custodians. The other thing that we're able to do with this infrastructure is true cross-exchange trading. So you hear a lot of things out there in the space, in the crypto space, where people are trying to do liquidity aggregation. In all cases, that liquidity aggregation it's one of two flavors. It's either not actionable, meaning you have to have an account and assets at every underlying liquidity source, so all of the different exchanges that have been aggregated, or in some cases where you don't do that, you actually, the party in the middle that's organizing that or providing that service actually is the counterparty to your trade, and they're using their balance sheet to put assets at all the underlying exchanges. So you actually end up having worse counterparty risk than you do interacting directly with the individual exchanges. So in this case, the way our system works with this architecture is you can have any number of traders that have assets at custodians, and exchanges can simply take their a small portion of their fiat and crypto omnibus client assets, hold that at a custodian on the network in their own name, And at that point in time, we are then able to do two things. We're able to take streaming rates and other liquidity that we have within our environment, make that visible in their book, and make it actionable, meaning their end traders can actually deal on that liquidity without knowing anything about where that liquidity is coming from or anything about OTCXN. And then we're also able to take their order book and cross that with any liquidity on our network or show that in our visible book or cross it against our dark pool. And so that gives you the ability to get really the same effect that you, in the FX space, we're used to having Prime Brokerage, which stands in for the counterparty and settlement risk, and it lets you do these aggregations. And really, if you think about it, it's how we grew that market to the size that it's at today. So now we have the equivalent available for the crypto space. I'm going to talk about just some of the concepts again really quickly here. So what we've really created, if you think about it, is a layer 2 network. So we have those 4 major components: that asset tokenization, that proprietary blockchain layer, that real-time collateral management, all those secondary market trading venues and services that sit atop or above all of the public and private ledgers and any legacy accounts at the custodians or in various wallets or whatever the case may be. And it's conceptually similar to something like Lightning Network, except it's able to work across all cryptocurrencies or crypto assets, and there's no limits in terms of the size and scale. And really, if you, just to restate it again, we've essentially removed public ledger transactions from the real-time trading pipeline. So that means that you can trade these digital assets, these crypto assets, at high frequency on this layer 2 network. All of the crypto assets are always in cold storage or deep cold storage. They never move. You never have a public ledger transaction unless and until somebody moves assets from the custodial cold wallet out to a non-custodial wallet. And again, we do this without any native token. So this is a pure protocol. None of the institutional clients that come on platform hold any kind of OTCXN token. There's no such thing. No stable coins are required for any of this. And if you're an asset manager, the beauty of this is that it also, because there's a blockchain underpinning to it, there's provable assets, provable transactions, which you don't have when you trade on an exchange, right? You get a PDF file from a company in some jurisdiction. So if you're thinking about fund administrators, auditors, things like that, if you're a regulated entity, this is a very, very important nuance. And if you think about block trading too, not having the public ledger transactions, I mean, just think about the information leakage, all of the folks that are there monitoring those public ledgers looking for transactions. So that goes away as well. And this also is applicable if you believe, as we do, in a digital asset future where securities are issued natively digital on blockchain layers. You're going to still need a layer 2 network like this in order to provide the same kind of trading experience that institutions are used to today, because you're going to end up having public ledgers, you're going to end up having private ledgers, stuff that's deployed in the cloud, stuff that's deployed in the data center. So somebody will do all the interop and normalize that in terms of interacting with it, but you would treat that the same way we treat the public ledgers today and essentially digitize those digital assets again so that you can have that on platform with all of the secondary market trading capabilities at institutional scale. So we've talked about how we have created a technology equivalent to Prime Brokerage, and you're probably wondering about the rest of Prime Brokerage, all of the Prime services. So really this architecture, if you think about it, where we have provable assets on these blockchain ledgers that are at a custodian, real-time collateral management, together with margining, mark-to-market, and auto-liquidation, all on the same platform, we've actually made it possible to unbundle those Prime services and really create marketplaces around that financing. So if you think about the things we're working on now in coin lending and leverage financing, we can create a very great experience from an institutional point of view. If you think about being able to short coin, anybody that has coin can put it in cold storage at a custodian directly on network, and we can, if they can give us rates and margin requirements, we can effectively encumber the collateral that is required to back that lending, and also encumber the assets that are lent to prevent rehypothecation. so that you protect both parties on both sides and essentially programmatically enforce all of those rules of engagement instead of relying on a piece of paper. Today, when you do coin lending, you call up some of the big players, you talk to a guy, you get a term sheet, you got to sign a term sheet. You know, it's a very different experience. On our platform, people will be able to just programmatically short, subject to the availability of their own collateral and inventory that's available. Same thing with leverage financing, and this is applicable both in the crypto space and in the spot FX space, because we can do this with spot FX where somebody can stay primed and essentially face somebody who is not primed. So imagine a major non-bank market maker facing a retail broker directly without prime of prime sitting in the middle, where other parties that understand how to price those risks can come in and lend balance sheet in various forms to back that, and essentially all the parties can grow their business, much lower cost than prime or prime, and the same, if not greater, safety in terms of the counterparty risk to both sides of the equation, given the availability of those assets collateralizing all of that. So I'm going to jump over to the next slide here. Another important aspect of this is really this provability, just reporting. As you think about your fund administrators, your auditors, your regulators, we've got these blockchain ledgers that are run by custodians on the network, where the provable assets are there, the provable transactions are there, and you can give out and permission read-only views to different parties that are providing services or that may be regulators. And obviously you have these independently verifiable immutable records and all of the transparency and risk reduction that comes from providing that service. So to wrap up, again, this is really a platform that is quite broad across all digital assets. We're having conversations around doing this in treasury repo and commodities and various other assets. And again, it's that asset tokenization, that proprietary blockchain layer, that real-time collateral management, and then all the different trading venues that we operate that are powered by that on top of it. And so we're just a little bit of an update. We're getting ready to, between now and the end of the year, roll out the dark pool, institutional only, so there will be no direct retail activity there. Same thing with our lit central limit order book. UI and fixed APIs for interacting with both of those pools, and maximum price improvement across all the different flavors of liquidity that are available in the platform. I think we do have one more view if you have the streaming available. I can so in that same web application that we showed earlier, you'll be able to execute on streaming liquidity coming from major liquidity providers, which is quite deep. Very different picture than what you see when you go look at a retail exchange. That'll be available here in the web application, and then we have a Java thick client application that you can give out to clients as well, to allow you to trade on that same liquidity if that's your preferred method. So appreciate very much everybody's time, and I guess I don't know if we have a few minutes for questions. Yeah, any questions? Yeah, please. Yeah, great question. So right now in the U.S., up until very recently when Fidelity announced, there were only two other regulated custodians. So there's two companies, one called Kingdom Trust and one called Prime Trust, and they're both regulated by state banking regulators in the United States. They can both hold fiat assets and crypto assets. They are both insured. Kingdom Trust recently had a press release about their Lloyd's of London policy covering any crypto loss for any assets that are held there. And we're in the middle of onboarding Fidelity and a range of other custodians, some that do crypto only, some that do fiat only. Basically anybody that's in the space who's regulated, we're at some level of conversation and onboarding.
So just those are two US-based custodians?
At the moment, yeah.
Around the world,
Yeah, so there's banks in Liechtenstein and in Switzerland that we're in talks with. There's one down in the Caribbean that serves that region that we're in talks with. There's another crypto provider regulated out of Malta, crypto custody solution provider that we're working on. So we ultimately should have something that serves all the needs of people across various jurisdictions. But at the moment, it's just the two U.S. regulated entities. Any other questions? That's it. All right, guys. Thanks so much. Appreciate your time.